Hi, everybody. It's Peter Schiff, and it is Friday, December 31st, 2010. Well, the stock market closed out the year on a bit of a whimper. I think the Dow was off about 7 points today, but very different story in the currency markets, commodity markets, precious metals. The dollar was down pretty sharply against just about every currency. Dollar index closed right around 79. But we had currencies like the Swiss franc and the Australian dollar close at record highs today. Oil was up about $1.50 a barrel. Gold finished the year above 1,400. I think it was up $15. Silver finished the year with its highest close in 30 years, north of $30 a barrel. The CRB had a big move. It finished at a new 52-week, or I think over a two-year high. So the trends of weakening dollar, stronger commodities, a stronger gold and silver certainly closed the year very strong, which tells me that they're likely to reassert themselves early in 2011. You know, there's a lot of optimism out there for 2011 about the U.S. economy, the U.S. stock market, but there's so many things that could go wrong in 2011. And, Murphy's Law says that anything that can go wrong will go wrong, and there are a lot of things that can go wrong in 2011. I'm sure one of them will, and if one of them does, many of them will, because it will be like dominoes. First of all, let's talk about how the Dow did in 2010, because a lot is going to be made about the fact that the Dow was up 10% in 2010. Big deal. I mean, the Dow was up 10%. If you measure the Dow in terms of other currencies, for example, the Australian dollar was up 16% on the year, which means in Aussie terms, the Dow was off 6%. The Swiss franc was up 11% too, so the Dow still lost about 1% in terms of Swiss franc. Even the Japanese yen was up 12%, so in terms of Japanese yen, the Dow lost about 2% of its value. I heard a lot of people on television today talking about the strong dollar. I mean, the dollar wasn't strong in 2010. It only managed a 1% gain, the dollar index, for the year. And that's because the euro, which dominates the index, was down 7%, and the British pound, which is the next strongest currency, was down 3%. But if you take out those two extra weak currencies, you find that the dollar, in fact, lost ground. But a much better way to measure the performance of the dollar is not to compare it to other flawed fiat currencies, but to real money. Gold was up 27% in 2010, the 10th consecutive year, I think, of double-digit gains for gold. Silver had an outstanding year. The price of silver was up 75% in 2010. Does that sound like a strong dollar when you need 75% more to buy an ounce of silver than you did when the year began? The gold stocks, the Huey index, was up about 30% on the year. And that's not much stronger than the price of gold, and certainly underperforms silver. Now, I mentioned earlier on this blog, I think a month or two ago, that I think the gold stocks, the mining stocks, are looking a lot stronger. They're starting to lead. So if I'm right, if we get another up year in gold and silver in 2011, I would expect that the gold stocks would significantly outperform in 2011, not just a couple of percentage points on gold, and I think they'll actually outperform silver. Even if silver has as big a gain as it did this year. So we'll see what happens. Now, the CRB itself, let's talk about that. Commodities in general were up 18% on the year. But if you look at some of the individual components, it's an even stronger story. First, oil. Oil closed up 17% on the year. Not that substantial, but considering how important oil is to the economy, that's a big move. Looking at some other futures, cattle, meat prices, live cattle up 20%. Copper up 34%. Copper closed at a record high today. It's getting close to $4.50 a pound. It could be at $5 in January. Corn was up 40%, very key commodity. Wheat was up 43%. I forgot to check soybeans gain. I know soybeans closed at a 52-week high, over $14 a bushel. I mean, that's a huge increase. I forget the percentage. Sugar, I know, was up 52%. I checked that. Coffee up 63% on the year. And here's a big one. Cotton prices up 90% on the year. I joked on an earlier video blog that my jockey shorts outperformed the Dow Jones. Year over the year, it outperformed it by a considerable margin, as did just about everything I have in my refrigerator and in my cabinets. So you really have to put the meager 10% gain of the Dow in perspective. And also, if you want to think about 2011, what's likely to happen with the dollar, there's been a story floating around the last couple of weeks about the Chinese trying to bail out European nations like Greece and Ireland and Portugal, that China is going to be using some of its 3.7 trillion in foreign reserves to buy debt of European countries. Well, if they're going to buy more debt of European countries, that means they're going to sell debt or buy less debt of the United States. Right? If they're going to diversify their reserves into euros, they need to diversify out of something. And it stands to reason that what they're diversifying out of is the dollar. So when China looks across the landscape of flawed currencies, it's more likely to want to buy euros than dollars, because as weak as the euro is, I think China realizes that the dollar can be a whole lot weaker. And considering how many dollars China already owns, it makes a lot of sense to hedge its bet and pick up some euros instead. If it's going to prop up any economy, why prop up the U.S.? It might be better to prop up the Eurozone. After all, they're probably going to be better customers than Americans, because as bad as the problems are in Europe, they're a whole lot worse here in the U.S. Speaking about China, I happened to be watching the Kudlow show earlier in the week, and John Brown from Europac was on there talking about China. And this guy actually had the nerve to say that what we need in China is Social Security and unemployment, that we need these social safety nets because the Chinese are saving too much, and we need the government to come in and take care of everybody so that people won't save and that they'll spend. I mean, the reason that the Chinese economy is so strong is because they're saving. The last thing that China wants to do is become more like America. I mean, here this guy is saying that there's too much freedom in China. There's too much individual self-reliance. There's too many rugged individuals. What we need is a nanny state in China. China needs to be more socialistic like America, not the free market country that it actually is. I mean, could you believe a guy actually saying this? The last thing that they want. I mean, talk about committing economic suicide. You think China's looking at America and seeing the gigantic mess that we've made of Social Security with this Ponzi scheme and all the millions of Americans collecting unemployment checks? You think China really wants to emulate that aspect of the U.S. economy? I mean, it is crazy. People are criticizing China for being too free market oriented and that they should be more socialistic like the United States. And of course, the reason this guy wanted China to buy more, or Chinese consumers to spend more, is so they would buy more stuff. But like they're actually going to buy more American stuff? Of course not. When the Chinese people start to spend more, they're going to buy more of the same things that we're buying, Chinese products. And of course, the real reason that the Chinese aren't buying more products is because they can't afford them, because the government is suppressing their currency. Well, the Chinese yuan closed, I think, at its highest level since 1993 today. I think the trend looks very strong. Who knows? We can have a very, very big up year for the yuan next year, much more than what people think. And that's what's going to give the Chinese purchasing power, not depending on a nanny state so that they no longer have to save for their own retirement or save for a rainy day, that they depend on the government for doing it. Anyway, that's it for today. A couple of announcements I want to make. First of all, I had a op-ed in the Wall Street Journal on housing. Check it out. It's the most popular article right now on thewallstreetjournal.com. If you're not a subscriber, just go to Google News and put in Peter Schiff housing prices, and you can read the article. Also, don't forget my radio show, The Peter Schiff Show. It's been off all week. The station was closed for a holiday. I will be back next week, starting on Monday, doing live shows every day from 6 p.m. to 8 p.m. I think I got Michael Santelli from CNBC. He'll be my guest early next week. So make sure and check that out. And we've got the bugs out of it. It's free for 24 hours. You can watch it live, or you can listen to it for the first 24 hours. You don't have to pay anything. Also, I got a great article on my website, Europac.net today, on the post office and forever stamps that was actually inspired by one of my callers to the Peter Schiff Show, I believe, last week. So check that out online on my Europac site, Europac.net. And again, don't forget schiffradio.com for my radio show. Anyway, that's it. This is the last commentary of 2010. Have a fantastic New Year's Eve, everybody, and great New Year's. 2011 promises to be a very, very eventful and very, very interesting year. It could be the year where it all hits the fan. And if it's not in 2011, I think it'll definitely happen in 2012. So stay tuned. I will be back in the New Year's. Happy New Year, everybody. Take care.